taking the time out to listen to my presentation today. I will be doing a presentation about Dunkin Donuts and following its stock for 6 weeks. I will compare it with the Dow Jones Industrial Average, and I will show how various issues in the company as well as the overall economy have repercussions on the worth of stock. And I will also show a loss of some money if I had bought stock in Dunkin Donuts 6 weeks ago, as well as a gain if I had bought it during its IPO. First, I'll start out with the history of Dunkin Donuts. Dunkin Donuts was started in 1950 by William Rosenberg in Quincy, Massachusetts. Today, its headquarters are in Canton, Massachusetts. It was originally focused on donuts and baked goods, but today, over half of its business is in coffee. Dunkin Donuts was first licensed, and its first franchise was licensed in 1955. Some of its slogans were "Only at Dunkin Donuts" from 1950, "Time to Make the Donuts" in 1980s, and "America Runs on Dunkin'," which is today's. The company held its IPO on July 27, 2011, starting at $19 a share, which was slightly above the expected range that had been set. They were looking to only gain $400 million, but the jump in share price during its IPO went to $423 million, making it one of the most successful IPOs in the restaurant industry in recent history. Dunkin Brands Group is a subsidiary of Dunkin Brands Incorporated. You can read their mission statement. Dunkin Donuts will strive to be the dominant retailer of high-quality donuts, bakery products, and beverages in each metropolitan market in which we choose to compete. Their business summary is Dunkin Donuts Brands Group Incorporated, together with its subsidiaries, own, operates, and franchises quick service restaurants under the Dunkin Donuts and Baskin-Robbins brands worldwide. It offers coffee, donuts, bagels, ice cream, frozen beverages, and other baked goods. It is franchised. Its franchise model comprises of 9,760 Dunkin Donuts restaurants, 6,433 Baskin-Robbins restaurants, and as December 31st, 2011, it had 10,083 Dunkin Donuts restaurants in 36 states, District of Columbia, and 31 other countries. Now, some of the things I found while doing research for Dunkin Donuts while keeping track of its stock was that it dipped 15 times during the 6-week watch, averaging 44 cents drop in worth. Interestingly, the Dow Jones Industrial Average also dropped 15 times during the 6-week watch, creating a drop with a mean of 33 cents. I used a mean for the Dow Jones Industrial Average because it was more fair than using the average, since about 2 or 3 days it dropped or gained over 100, which isn't obviously the norm, so I used the mean for that. The things I shown was that Dunkin Donuts performed worse than the Dow Jones Industrial Average. There's a couple reasons for this. During the first week of the watch, it showed that although the company had raised higher quarterly results than the previous quarter, its shares still fell 4.9% after the U.S. and its sales analyst targets. However, the chief executive says that they will continue to show resiliency in the tough economic times. And meanwhile, the stocks in the Dow Jones that week had raised $354.20. However, such a big jump in price shows how unsteady the economy is. During the second week of the watch, stock prices for Dunkin Donuts fell about 66 cents. And I'm thinking it could be due to uncertainty in the company, because that week, Dunkin Donuts had just appointed a new vice president by the name of Cecily Simpson. And prospective investors may want to see how this affects their company in the near future before they're before gambling their money, especially since the Dow Jones tumbled 23 cents that week, with no lessening in the unemployment rate. Together, the third and fourth weeks produced a 93-cent rise in stock prices for Dunkin' Donuts, and in my opinion, this is because of Dunkin' Brand's announcement of its secondary offering and the repurchasing of shares in its common stock. Also, it launched its new mobile app to help boost sales, and coincidentally, the Dow Jones Industrial Average showed a raise of $157.69, erasing their earlier losses. They're thinking that happened probably because the Federal Reserve plans to prop up the economy, at least that's what they're hoping. Unfortunately, the last 2 weeks of the launch revealed a plummet of $1.20 in stocks for the Dunkin' Donuts stock. This is undoubtedly due to reports of Dunkin' Donuts being accused of racial bias toward ex-franchise owners, as well as one of its big investors, Bain Capital LLC, seeking bankruptcy. The overall comparison of Dunkin' Donuts and the Dow Jones Industrial Averages during the first few weeks after its initial opening in July 2011, it seems that Dunkin' Brands at times had traded below the DJIA, but rose quickly during its third and fourth months of going public. However, the next 5 months showed that Dunkin' began trading below the Dow Jones, only to rise in the next 4 months. Currently, it is trading below the Dow Jones Industrial Average. I feel it is too soon to make a prediction of how